Hi everyone, welcome back. In this video, I'm going to go over a concept that a lot of our members have been asking me about quite a lot, and that is how do we enter a trade in the direction of a trend that is already underway. In other words, how do we enter a trade after we have missed the original buy signal? So for example, I have brought up here a random chart. This is CVNA 1 hour chart. And as you can see, the ATS gave us a new buy signal. So it changed its color from red to blue and it gave us this new buy arrow here. And this resulted in a really big uptrend to the upside that was going on for a long time, actually several months. Now, if you miss this original signal here, the question is there a systematic way that you can follow in order to enter a trade long after a new buy signal was given and you missed it, right? So that's basically the question, and the answer is yes, you can. You can use actually several methods in order to enter on an ongoing trend. So it's not that you just missed the original signal and there's no way for you to profit from these moves, because there is, and I do it all the time, and I'm going to show you exactly how you can do that as well in a systematic way. So not depending only on discretion. Of course, if you are an experienced trader and you have a feeling for the price, maybe you have your own price action patterns that you follow, then you can use those. But if you're like me and you prefer more systematic way of trading, then this video is for you, and I'm going to show you how I do it and potentially how you can do it as well. So let's jump right in. So basically, we have this new buy signal. Price has been going up. The bars are blue. The AutoTrend system is basically telling us that there is an uptrend going on. There's no reason to be shorting here. We're not looking for short trades. We are only looking for long trades. We're going with a trend. This is a trend following system, right? So we just need to find an entry point because we don't want to be entering randomly. Just because there is a new uptrend, it doesn't mean that you should be buying, let's say, up here. Okay, it doesn't mean that you should be buying here or up here. You need to be doing it in a risk, how do you say that? In a way that makes sense for your risk parameters. You don't want to be entering at the tops, at the peaks, you want to be entering at the valleys or just as the price is coming out of a valley or a pullback. Now, a pullback is quite subjective, right? So you can see what would I classify as a pullback? Let's say price has been going down like this. Now, let me change the color of this so you can see it. Price has been going down here, but at what point here can I confidently say that, okay, this is low enough, I can buy here for a move back higher? Now, what if it just keeps going down and it doesn't? At what point will I realistically say that, okay, this has been low enough, I can now enter for it to go back higher? It can always go much lower. So that's not really a systematic way of doing it. We need another way, another layer to add to our strategy in order for us to have a clear set of rules for us to follow. Because the AutoTrend system is all about following clear rules that we can do it over and over again consistently and systematically. And if you are a member of the system, you know that we do everything based on very clear non-subjective rules. That's very important. So we need to have a way that we can enter trades after we have missed an original signal in the direction of the trend, but we can do it in a systematic way. And the way I have been doing it for a long time is by actually using a very simple moving average. So that's not part of the AutoTrend system. You can find a moving average on any charting platform. So on TradingView, if you go on indicators and you just type simple moving average, you'll find this one here, moving average simple. Just add it to your chart, and you want to go to the settings here, click on the gear icon, and then on the length, most of the time I use a 50 period moving average. So this is taking the average of 50 bars, whatever your time frame is. This is an hourly chart, so it's taking the average of 50 hours and it's plotting it to my chart. And I only use this. Remember, I don't always have it on my chart. Usually I like to keep my charts pretty clutter-free. So 99% of the time I will only have the AutoTrend system, maybe the trend validator if I'm looking for a new entry, and the dynamic profit levels. So I can look for profit-taking levels. But if I have missed an original signal and I'm looking for a pullback, then most of the time I will be using the simple moving average, the 50 simple moving average, and I will be waiting for price to basically do exactly what it did here. We can see that price went up here. We went up, and then we moved back lower. We touched the 50 simple moving average, and then we moved a little bit sideways, but then we continued higher. And that's exactly what I want to see. Basically, it's a way for me to enter an ongoing trend on a pullback. I don't want to be entering when the risk is the highest. The risk is the highest when it's moving higher and it's not giving us any pullback. The risk meaning that there is a high probability that price will move lower. We always want to enter at the best price possible, and that happens when there is a pullback. Well, actually, the best price possible is when there is a new signal right here. That's the first bar that gave us the signal. That would be the most optimal point. The second most optimal point would be at a pullback right here. The way we measure a pullback is by using a simple moving average. So when price comes down, hits the moving average, and then starts bouncing, that's very important. When it starts bouncing, so basically, I would say, let me remove those so you can see it. If this is the first bar that hits the moving average, then I would be entering somewhere like here. When I can see that price starts to continue in the desired direction. In this case, moving back higher. So when that happens, I can set up a trade. I have a trade that I can follow, and my entry and risk criteria are actually quite the same as with any other AutoTrend system strategy. So in this case, if my entry was here, just as the price is bouncing from its pullback, when the pullback is appearing to be ending and the uptrend to be resuming, then I can enter here and my stop loss will need to go below a prior swing low. Not the swing low that created the pullback. So not this one here as price went down, put in a low and then moving back higher. I wouldn't be using this swing low because that's quite close to my entry. Very often you will see price doing something like this when it puts in a pullback, especially if it's a pullback after a prolonged run. It will move down, put in a low, go back up, overtake the low, but maybe a few points, and then move back higher. And I don't want my stop loss to be taken prematurely. I need to let the market breathe a little bit. We're not trying to be taking sniper laser focus entries, because I don't think that's the best way to trade. We cannot know exactly what the price will do. We can only take our setups, manage our risk, and take our profits. And based on my experience, I need to be letting the market breathe a little bit. So my stop loss will need to go below a prior swing low. So somewhere like here. This one here. This is the last possible swing low. If this is the first one here, which again is too close to my entry, then this one would be the second logical position for me. And we're not talking targets right now, but my target would be a dynamic profit level. I don't have it right here on my chart. But if you have seen any of my other videos, you will know that I like to scale out of trades using the AutoTrend system's dynamic profit levels, or DPL for short. So let's say a DPL was up here. My target, my first target, let's say a third of my position would be sold up here if and when the price reaches it in the future, which it did several days later. So that's one way that I would use to enter a trade after I have missed the original signal. That's one way. Now, it doesn't have to be the very first pullback. Let's say that you also missed this trade here, but you still want to participate in this uptrend because you can see that it's quite strong, right? You can still do that. You can simply wait for a future pullback, and this can happen, let's say here, if you're up there, or here. The important thing is to not enter just as price is just hitting the moving average. In other words, you don't want to be entering when it's going down. You want to be entering when it's moving back higher. So in this case, I would be entering here because it's moving down and then it's moving back higher. You always want to be entering when it's moving towards your desired direction, because you simply don't know if it's going to bounce or not. You need to see some evidence. And usually we have this signal. The ATS is designed, it's being programmed to give us new signal as the price starts to move in the desired direction, because very often this will put us immediately in profit. If we don't have that, if we don't have those guiding signals, we need to replicate how the ATS would do it. And it would do it by giving us a new signal when the price starts moving in the desired direction. That's very important. You don't want to be entering long when price is on its way down. You only want to be entering long when it starts to move back higher. And your stop loss always goes below a prior swing low. So it would have to go below here if your entry is here, or below here if you want a more conservative stop loss that has a lower chance of being hit. And that's usually how I would do it, because I prefer to be conservative. All right, so that's how I would do it. That's actually my own personal strategy, but another one that you can use if you prefer an RSI. A lot of people use the RSI. I often use it, just not as often as a simple moving average. I like to keep things simple, and I prefer the moving average because it's just a simpler concept to see on the charts, and it doesn't clutter too much. But if you prefer an RSI, or a stochastic for that matter, just go up on the indicators, search for RSI, and you can find the relative strength index here. You can leave the settings as default, and it will plot it here on the chart. Now, if you don't know what the RSI does or how to use it, just stick with the simple moving average. This is just a second option for people who are familiar with the RSI and like to use it. The way I would use it with the RSI is I would either, now there are two ways. One way would give you less signals, but potentially a better price. The second way, which is my preferred way, would almost guarantee you an entry on an ongoing trend, either an uptrend or a downtrend. And that is, you want to wait for the RSI to cross the middle line. More often, mostly that's the 50. Here, if you look at the scale, that will be the 50 number. You wait for it to cross the middle line down, let's say for an uptrend. In this case, it's an uptrend. You wait for it to cross down here. That's your first step. You don't have an entry yet. And then you wait for it to cross back higher. Why do you want to do that? Because remember, we always want to enter as price is going back towards the desired direction. If you're going long, you don't want to be entering when price is going down. Or in other words, when the RSI is crossing the middle line from up towards the downside. It's the opposite. You want to wait until it's crossing it from down towards the upside, because you're entering as the tide is turning, right? You're not entering as prices are moving down, you're entering as prices are bouncing back in the direction of the trend that you're trying to capture. So that's how I would do it with the RSI. So in this case, my entry would be, let's say this is the bar that crosses higher. My entry would be, again, it's actually at the same location. It's just a different way of doing it. My stop loss, my entry would be up here. My stop loss would have to go, as I said, I'm quite conservative, so I would place my stop loss below this swing low. If you prefer to be a little bit more aggressive and you want to place it behind the latest swing low, you can do that. But I would suggest that you go in with smaller size to account for that increased risk. My stop loss would go here. And again, we're not taking profits here. We have other videos covering that. Let's just say that I would take my first partial at a 2-to-1 risk to reward ratio, which would hit at this point here a few days later. So that's how I would do it with the RSI. And again, same thing. You have several entries here. Let's say you missed this original one. Look at this. You have another entry here because the RSI is crossing below the middle line and then it's crossing back up. So you're going with the tide, you're going with the trend. You always want to be going with the trend, not anticipating what the trend will be, but going with it. So the RSI also gives you several entries, okay? So that's basically how I would do it. Remember, the point here is to be able to participate on an ongoing trend. As I said before, the optimal position would be to enter with the original signal here. That's the first signal. That's the first time that the ATS gave us a trend change signal. My optimal entry would be here. The second optimal entry would be to wait for a pullback and have clear systematic ways of doing that, either with a simple moving average or an RSI. And basically you can make your own rules for that, but they have to be systematic and they have to make sense. In this video, I gave you 2 of my preferred ways of doing it, and you can just use those. You can just use those exact rules and follow those, or you can make a variation of your own rules if you're familiar with other indicators or you have your own preferences. The key point here is to have rules in place, to have a strategy in place, as opposed to just doing it discretionally. Just because you think that a pullback has gone down enough, that's not reason enough for you to buy it. You need to have clear signals and clear rules that you can follow consistently, and you want to take your discretion out of the equation, because more often than not, it will do you a disservice to follow your emotions when it comes to trading. You want to have rules in place that you can follow. And if you do that long enough and you see the rules play out in your benefit over time, you will gain the trust that is necessary for you to follow them consistently so you can enjoy consistent results. All right, so I hope this video was helpful. If you have any more questions or you have suggestions of what you want to see covered in future videos about the ATS, let me know, and I'll be happy to make more of these little tutorials for you. All right, so thanks for watching. Wishing you a great start to the new year, and yeah, let's go make 2024 a quite successful year for us. All right, so thanks for watching. Take care.